Can the market rally continue as earnings start to roll in? That's coming up on 3 Minutes on Markets and Money. This morning, futures are pointing down just a little bit. That's not surprising. After 2 days of a rally here, not surprising, stocks are going to give back a little bit of this gain. It's been a very nice return off the bottom. As we talked about last Thursday, following that hot CPI report, the market did set a new low, and that was important because that reversal off of that low also confirmed the negative divergence that we saw occurring in the MACD. So the MACD was actually rising. It did not set a new low when the market set a new low. That was also the same thing for the relative strength index, also a negative divergence there. Both of those suggested that we were likely going to see here a short-term bottom in the markets at least. Markets are going to be challenging this 3,800 level right now, which is the previous tops that we set just a couple of weeks ago. A move above that 3,800 level is going to start to look at 3,900 as kind of that next target. That's the 50-day moving average. If the markets can get above that, well, then you've got to rally up to about 4,100 potentially. That's probably the limits of this rally here as we move into the end of the year. So again, use any type of rally that we do get in here as an opportunity to raise some cash and rebalance risk. We continue to talk about that because we're likely not through this bear market just yet. But the markets are oversold enough here. We are in a buy signal that does suggest we could get a little bit of push here. Earnings coming in a bit better than expected. Not surprising. We've been lowering earnings estimates. Netflix out yesterday talking about a return to subscriber growth. That stock up about 12% this morning. We're seeing numerous other companies coming out right now, all reporting a little bit better than expected earnings. Procter & Gamble, ASML, others all suggesting that, well, things might be okay right now, at least in the near term. Those stocks getting a lift, that'll help try to lift the markets. But over the next 2 weeks, lots of earnings reports. We need to defend this 20-day moving average at 366, and that's going to be the important level here. So a bit of a pullback today after this rally over the last couple of days. Again, won't be surprising. Need to defend the 20-day moving average, move up off of that, and again, if break above that, kind of that 3,800 level would be a really good indication this rally's got some legs to it. Use the rally again to sell into, because as we move into next year, things are going to become a little bit more problematic as all these Fed rate hikes start to catch up with the economy and economic growth as well as earnings growth. That's 3 Minutes on Markets and Money. See you back here tomorrow.